thing I'm going to do is show this video, this Guardian video that I had on the website that I thought was kind of cool. It's actually from Berlin, and it just shows an area where people are actually accepting Bitcoin for retail transactions.
Kreuzberg traditionally is an area in Berlin where people are politically very aware, where people are critical towards existing systems, and where people are discussing and looking for alternatives to the existing systems. Therefore, Kreuzberg is actually a perfect ground for Bitcoin to arrive and to reach people and to convince them.
What attracts me to Bitcoin is the possibility to be in control of my own money and to transfer that money without anybody's say-so across the whole world in split minutes or seconds with zero fees.
Bitcoin really is the first global money we have. Bitcoin is something that could be from a science fiction novel, but we're having it today and not in 20 years.
Looking at the way the economy is going and the way that we're dealing with it, I don't really trust having my money in the banks. I think, maybe 2 years ago I might have felt less strongly about that, but after seeing what happened in Cyprus, I feel very strongly that we really can't trust the institutions that are around us.
I've used Bitcoin to buy a bunch of things. Honey from Thailand. I've bought some historic flags from the United States. Of course, I've bought my beer and my burgers here at the bar. I've bought gold and silver Bitcoin. I've bought a ticket for a concert next week in Berlin.
I first came across Bitcoins because two Spanish friends of mine who were very worried about the way the economy was going in Spain decided to invest their inheritance in Bitcoins. It was 30,000. They're not rich people, so I found that pretty shocking, and I thought it was a huge gamble. That was about 3.5 years ago now. Something like 30,000 has gone to 600,000, so they did very well.
We're working on establishing, as I believe, the world's first Bitcoin-based local economy, using Bitcoin as an alternative local currency with global reach, a Bitcoin neighborhood as we call it.
I'm not that far familiar with Bitcoin so far. We just started 2 months ago to accept it. The advantages of the Bitcoin payment is that it's so easy, it's fast. I don't have to sit down on the computer and log myself into a bank account. Bitcoin scares people in suits, which I like. We're a punk rock brewery. Being able to go to Asia, America, South America, wherever you want to go, and being able to pay with one currency would be a nice thing for this world. Lots of bankers would get bankrupt.
I decided to accept Bitcoins because it's an easy way of digital payments, and it does not mean that I have to pay others a certain percentage of my money, more or less, in order to get the money on my account. It is interesting to see that there is not a specific typical Bitcoin payer. It's random people. So I don't think there's a prototype Bitcoin payer. It's not only nerds, let me put it that way.
Ich kann mich gut an meinen ersten Bitcoin-Verkauf erinnern. Das war eine Tom Waits, die Big Time. Daran kann ich mich erinnern, weil ich bei der Kaufabwicklung selbst ein bisschen Probleme hatte und es nicht sofort geklappt hat. Und das zweite Album war ein Beatles-Album, eine Beatles-Compilation von 1967.
Gibt es eine sehr beliebte Band aus Kreuzberg?
Der Lamid, das ist eine alte Kreuzberger Band.
Kreuzberg ist ein politisches Zentrum für Proteste, sei es gegen Gentrifizierung heute, als auch in den 70ern im Rahmen der Instandbesetzerszene und zeichnet sich durch ein kritisches, linkes politisches Bewusstsein aus. Und die Bitcoin-immanente Systemkritik bettet sich in dieses politische Bewusstsein im Grunde ein. Und deswegen denke ich, wird es erfolgreich hier.
On Wednesday, online services and exchanges dealing with Bitcoin did come under sustained cyber attacks. Now, it led to the value of Bitcoin to drop by almost 20%.
Yeah, the crash is extremely interesting because it really highlights how different Bitcoin is from a standard currency.
The speculation part of Bitcoin has been over-reported in the news. We've now come back to the levels that were deemed high in the past couple of months, so I think we've returned to the normal price or even slightly above that, but the underlying value is still there.
Bitcoin to me represents an opportunity to transform the way that we deal with the flows of wealth and human energy. I would look at these spikes and corrections really as the birth pangs of an entirely new system.
I'm gonna pay my bill now. It is 10 euros. I pop up the code. I scan it. I press send. And ka-ching!
There are certain reasons that could make one believe that there are flaws to our current economic and financial system, to which Bitcoin or something like Bitcoin could be the solution. So every day we do not start using a free currency like Bitcoin, we actually actively vote for the current system to continue.
Okay, so that's Kreuzberg in Germany, where people are actually using it. I don't know what percentage of transactions people are using Bitcoin for, but it shows, it shows that it can be used in a retail thing. I've used it myself. I've used it a little bit online, and I went to the Bitcoin conference in San Jose 2 weeks ago, and I used it there to make retail transactions. I bought a T-shirt. I joined the Bitcoin Foundation and got a T-shirt. But I'm pretty new to it myself, and I wanted to kind of do a next talk on it. And I picked the week that I have a deadline for one of my projects, so it's going to be pretty informal. But I want to ask people here what they know about Bitcoin, so I can kind of target things to people. Who in the room actually owns Bitcoins? You have some? Okay, so who had heard of Bitcoin at all before this talk? Okay. So Bitcoin is a peer-to-peer digital currency based on cryptography. It was created by the pseudonymous Satoshi Nakamoto on a cryptography email list, and he published a white paper. And when I say he, there's a debate about who this person actually is. Some say he claims to be a Japanese male, although they've analyzed his English to say, well, maybe he went to school in Britain. Some people say that maybe it was actually a team of people that was representing themselves as a single individual. Nobody's quite sure. But what they do know is that this person on the mailing list released the original white paper on Bitcoin and began to release an open source implementation of the Bitcoin protocol, which and then began mining Bitcoin. the way that Bitcoin works is this distributed network of mining systems maintains a global ledger of currency balances. When you use Bitcoin, you create a Bitcoin wallet, and that wallet uses a public key, private key system. Just a sec here. To track your balances, and so this is my online wallet here, and you see I actually have a trial address, which I can copy. And there's a great website called blockchain.info that you can use to see what's going on in the Bitcoin world. So this is my address here with a QR code, and then you can see what my balance is if you know my address, and you could scan this QR code with your phone and send me some coins. So you can see this address here is that's actually the hex string that corresponds. Can you see what I'm mousing over here? This right here is a hex string of digits that represents a wallet, and this QR code represents the wallet. There's also a private key, which if you get a hold of that, the money is yours. So the peer-to-peer network keeps track. I'm going to oversimplify this, and again, I'm no expert. I've been looking at this stuff for just a couple months. Can you see the address?
I don't want to interrupt you, but I'm curious about the permutations. I was in the code business in the Pentagon, for example, and I'm curious. Interesting.
Yeah, so the number is pretty large because you can just randomly generate a wallet anytime and receive funds in it.
Do you know how many permutations are there in the private address?
I don't know, but it's how many digits is it? Bitcoin address digits. It's going to be phenomenal.
Yes.
The Bitcoin Wiki is a great source of information.
Bitcoin what?
The Bitcoin Wiki. It's here, en.bitcoin.it. It's 27 to 34 alphanumeric characters. So I don't know exactly how many. 4.29 billion. The probability that a mistyped address is accepted is 1 in 4.29 billion. So to randomly generate an address, there's the chances of a collision are minimal. So once you have one of these addresses, you can put funds into it, and using the private key, you can make a payment. So does anybody here who preloaded Bitcoin software on their device? Okay. Do you have who's going to volunteer to receive a bit sent? We can actually do a transaction here as an example. Just who has a QR code? Okay.
I just installed this app, so it's all $0.
Okay. Which app did you install?
Bitcoin.
It's just called Bitcoin?
It was the first bit.
So,
just a little Bitcoin detector.
Yeah, so the one that I'm using is the one from this blockchain.info, and it's the only one I know of that's available for the iPhone. Apple had been rejecting them until recently, and this one got in. So I'm going to hit the send payment button here on my phone. Oops, I just messed up. One thing about Bitcoin is that Huh? Buy high?
Bye-bye.
But
If you put the wrong address in.
yeah, you can. It definitely could be made easier to use. So I hit the scan from QR button, and I get this little window, and then I just aim it at his QR code, and if I can get where.
I wonder if I can use March.
Oops. Oh, there we go. Okay, now I got it. And I'm going to send him a bit cent, which is about $1.30 at the current exchange rate. And I'm going to say send payment. Okay, you see it there?
Yeah.
No, wait a minute. Pardon me? I'm using blockchain.info or blockchain.
Yeah, it doesn't.
Oh,
It just popped up.
Well, you said you had two wallets, and
Pardon me?
that was the second wallet. So the first one probably hasn't been.
yeah.
You're rich.
I'm rich. Well, what happens is this is a little bit confusing. I actually thought I got hacked when I was at the conference.
Oh, really?
Yeah. What actually happens is your wallet, you actually have multiple wallets. So if I look at my client over here, it shows that my balance is 1.86.
Okay.
So what happens is when you do a transaction, it actually creates a new wallet. So you have a source wallet, which is where the money is. You have who you're giving it to, and then you have a change wallet. So the total amount that you have in your wallet gets divided between those two wallets, the one you're paying to, and the other one that you still have a private key for. So it's a little bit confusing, and the software that can be misleading.
So there are three steps: the source wallet, to the temporary hold, to the designation. Now, could the temporary hold for several end deliveries?
Yes. For the destination.
So I'm never opening up my source wallet for that which I'm paying to the recipients. So they have no prospective access to my source wallet.
No. When you initiate a transaction, you use your private key to authorize it, and then your private key is used to sign the what's called the blockchain, which is the next thing I'm going to describe in kind of oversimplified terms, which, to be honest, is the only terms that I understand it on. Did you see the funds arrive?
It says spendable in a few minutes.
Okay. So what happens is when you make a transaction, you can get kind of an initial confirmation almost immediately, but it's not considered cryptographically safe until it's been signed by all these mining devices that are out on the internet. And we actually have a Bitcoin miner here today, Fan, that's going to talk later on about his experiences as a miner. So the blockchain is essentially a distributed ledger that keeps track of how much money exists in each wallet. And the thing that you want to prevent, and this is sort of the genius of Bitcoin, is you want to prevent double spending. You don't want someone to be able to spend the same Bitcoin twice. So if I were to go buy a coffee, at the cafe, and somebody else were to go buy a beer at the bar with the same Bitcoin, then somebody just got screwed. Pardon my French. So the way that they prevent doing this is by using this peer-to-peer network of miners that sign this global ledger called the blockchain. And the way I think of it, and again, this is an oversimplification, is you basically have a source address, a destination address, and an amount transferred. And that gets cryptographically signed and hashed by the miners as a transaction, and a new block is created. A block is created every 10 minutes. So they say that you can consider a transaction to be fairly safe after it's been recorded in 6 blocks, because each block builds on the previous block. So when you run like a full Bitcoin client like this one here, Bitcoin QT, which you can download from actually the bitcoin.org. So if you go to this page here, bitcoin.org/en/download, you have a choice of downloading for a couple of different platforms, Windows and Mac. And this client, which is the one that I'm running, is the open source. This is Satoshi Nakamoto's code plus the changes that everybody else has made. And it actually keeps it. I actually have on my machine every Bitcoin transaction from the beginning of time, the beginning of Bitcoin time. So, and this client has actually verified the cryptographic signatures on that to make sure that I have an accurate copy of the blockchain.
How long did it take you to download?
How long did it take me to sync up? It took a couple hours, I think.
Yeah, it depends on your connection too.
Depends upon your connection, and your processor runs, pretty hard doing all this.
And you have to resync every time you restart.
Yeah. So whenever you reconnect, it says you're behind by so many days, and then it starts pulling in transactions and bringing you up to speed. Now, a mobile wallet doesn't do that. So there's a difference. So using this client, so there are all kinds of issues with Bitcoin. There's also some amazing potential. Again, I have to say, if you're going to play with it, be careful. You can lose coins by forgetting your password or by getting hacked, and it's those are things that can happen. I don't know, and if you read the news reports, you get some real conflicting information. There's a lot of stuff that's kind of hyped, pro and con, and you can read articles that can be pretty misleading. In terms of security, it seems that the core Bitcoin protocol, the peer-to-peer network that manages the transactions, has been looked at, ever since the paper came out. Cryptographers have been trying to tear it apart, and nobody has found nobody has found and said and announced that they found any flaws. There might be someone somewhere that has a secret and is going to take all the money one day once it's even more valuable. But it's survived peer review. It's survived in the wild, and there seems to be no attacks against it that are going to be effective. Now, there is a theoretical attack that a lot of people that are concerned about called a 51% attack. It's possible. So there's this peer-to-peer network of all these Bitcoin miners out there that are processing these transactions. And the processing power of that network is, by one estimate, equal to the top 500 supercomputers in the world combined. So if you were able, but if a single person or entity is able to get 51% of that computing power, they can start certifying transactions as authentic and cause lots of havoc, cause what's called a fork in the blockchain.
How do you certify a transaction as authentic?
Pardon me?
How do you certify a transaction as authentic?
That's what I'm doing by running the client. That's what the software does.
But
So
is there some kind of cryptographic code or something that you have to verify that you're? How do they know?
yeah, well, every transaction is signed, I think, in 2 ways: by the private key of the person that's spending the money. They authenticate, yes, I allocate these funds from my wallet. And then there's the mining algorithms also sign the blocks. Now that's very compute intensive. In order to sign a block, you have to do, this really hard mathematical puzzle involving prime numbers, and Paul could probably tell you a little bit more about that since he has a background in cryptography. But once that block is signed, and a tremendous amount of work went into that, and it's hard to that then becomes accepted, and then each block is a hash based or a signed version of subsequent blocks. And so they say that after 6 confirmations, you can be assured that it was a legitimate transaction. Now, I would say it depends upon the amount of money. If you're buying a cup of coffee or a beer, I would, face to face, I would say that the minute you get that initial confirmation, that you could probably serve the person a coffee or a beer, and your chances of getting ripped off are pretty low. There'd have to be, someone launching an attack on the service at that exact time or whatever. If you're buying and selling a house, you might want to wait for more confirmations, maybe even more than 6.
Can you go into some detail on what do you mean by wait for confirmations?
How many do you have there?
Yeah, how many confirmations?
How many confirmations you
It's
have?
still saying that it should become spendable in a few minutes. It doesn't even count.
Okay,
It
let's.
sounds like
Did you pay your transaction fee?
no, there's no transaction fees.
There
Did you-
is. Put in a
Well,
transaction.
that's
I did not.
You can speed it
So
up.
you could be waiting a while.
Who's the authenticators right now?
Pardon me?
Who's running an authenticator right now?
People all over the world.
You can do it with
Fan?
easy.
Huh?
So for example, like for mining, the different pools will set it differently. So the pool that I use for mining what I do is they set it at 20 confirmations and they'll pay you out. So that's the point at which they trust you.
Okay.
Okay. Oh, so I should explain a little bit more about mining. So basically, you get paid to mine. So anybody that wants to can set up a computer and install it in their. The classic example is a kid in his bedroom or in his dorm room, but there are actually people who do this as a business and use farms of systems. So you set up a computer, you install the Bitcoin software, you connect to this peer-to-peer network, and you start processing. And so they give you a mathematical puzzle, or they give your computer this mathematical puzzle. Your computer starts processing away. And if it's the first one to come up with the solution for that puzzle, you get awarded, how many Bitcoins per block?
25.
You get awarded 25 Bitcoins for solving that puzzle, and you get to keep them. They go into your wallet.
So why would you keep working on it if you're not the first?
Well, then you give up. Then you move on to the next block.
Right.
But then how do you get 6 confirmations if you stop working on
The confirmations will come from other people.
it? Why do they work on it if they're not going to get paid?
Because they have the possibility of getting, it's a statistical possibility.
Well, there's more than one way to mine. So if you're mining with just your computer by yourself, it's incredibly difficult because of how many people are doing it now. That they've set the difficulty of finding it by yourself to be incredibly high. It takes years for like a single computer to be able to solve like a block by itself.
What is the water?
Like the way it does it is random. I think it's like flipping 50 coins like at the same time. Like that's basically how it's supposed to work. But basically, so what people do is they'll pool their resources together to form this massive like computing network, and that's what mining pools are. So rather than trying to solve it yourself by your computer, you have basically a massive computing system trying to solve it, and it does it much faster. So you get paid out in a specific share based on how much you contribute, right? So because the pool is so much bigger and it finds it consistently, you get a consistent amount, like on a regular basis, rather than waiting for years and not getting one block, and then all of a sudden getting one block if you're super lucky, but that's really, really rare.
How did you pick your pool?
There's a lot of different ways to do it. So I pick it by size. So the bigger it is, the more consistent it will be because it generates it on a more regular basis. I've tried it with smaller pools, and there are days where you go without finding a single block, and then you don't get paid for any of that.
So you can do multiple pools.
You could, yeah. There's different strategies of people trying to hop between pools at the opportune times.
Okay.
So, but basically, yeah. Like I run 3 different pools. So if one pool has an issue, I jump to another pool.
Does the miner know, one, what the dollar threshold value of this specific transaction is, and secondly, is there a ceiling at which you can designate, because this is a lot of money, I want 25 potential mining authentications. This is a cup of coffee, I'm happy with 2.
I think we're conflating 2 related things.
Okay.
So if you're doing a transaction, you don't have to mine, right? When I just used my phone to transfer, I'm sorry, what was your name? Aaron. When I transferred a BitSend to Aaron, neither one of us is mining. We're just using our phones.
Okay.
But we have software that's tracking the output of the blockchain and tracking the results of all the miners. And those miners issue the confirmations. So every 10 minutes, a new block is added to the blockchain. And if your transaction is in that block, that's your first confirmation.
So I can answer her question. So whoever first gets that block, the next 5 confirmations are each for the next block after that.
Well, I thought you said you needed 6 confirmations to be sure that you're...
That's 6 blocks down the road.
It's a chain of blocks.
It's a chain of blocks.
So the blockchain is the ledger of who owns what. It has, if you have a complete copy of the blockchain from the beginning of time, you know how much money is in each wallet. And you can look at every transaction. So you can check the balance of your wallet or of someone else's wallet. And whenever there's a transaction, it has to go into a new, you could think of it as like an old accounting ledger. And then each page that's added to the blockchain contains a bunch of transactions. So when you make a transaction, it needs to go into one of those blocks. And then when there's subsequent blocks encoded after that, it just increases the level of confidence in the fact that your transaction was considered legitimate.
I just thought it was kind of surprising that only one person could verify that this transaction was.
Anyone can verify.
Right. Anyone on the entire mining network.
Yeah.
It's easier to verify. It's easier to verify than to compute. So to create that new block and add it to the blockchain requires a tremendous amount of computing power. And that's what this global network does, is they're all competing to produce that hash that will match that blockchain and sign it. And whoever gets it first gets awarded those 25 Bitcoins. So what happens is people form mining pools where they partition out the work. They say, okay, I'm going to try to solve it, but I want you to help me. So here's a piece of the puzzle for you to solve. And then everybody contributes. And then when they get those 25 Bitcoins, they then share it out to people based upon how much computing power they contributed to solving the problem. Now, the other thing so there's all kinds of kind of emergent properties of Bitcoin. I mean, the design, relies upon these various incentives. If there weren't an incentive for mining, nobody would do it. So that's why they pay out these 25 Bitcoins per block. The other thing that the algorithm does is it adjusts the difficulty based upon the amount of computing power that's out there. So as more computing power has gone into mining, they up the difficulty of the puzzles that have to be solved to use that additional capacity. And what has happened over time is when Bitcoin first started, people were just running it in software on their computers. Then people figured out how to use the specialized processors in graphics cards called GPUs to do the problems. And then the power went up and the difficulty rose accordingly. And then ASICs came out. Somebody's actually developed custom chips to do the mining. And now that the ASICs are coming out, the power has gone up even more, and it's harder, if not impossible, to make enough money to pay your electricity bill for mining if you just use a regular desktop computer. So the network kind of adjusts as time goes forward. Yeah, Paul.
If you're done, I want to get back to this gentleman's question, which was, how do you decide, you know, I'm buying a cup of coffee or I'm buying a house? How do you decide? How is it communicated? I'm willing to wait, you know, I'm buying the house, or say, no, even better, a house is something you can just walk in. Let's say you're buying something very expensive, but it's in Europe, and they have to ship it to you. How does that work? How do you know, do they not get the money until you have the thing physically, or how do they decide, okay, here's your money, you really do get your money at this point?
Yeah, well, that's a good question. I don't think there's a single answer to that question. So here you can see the transactions that I've recently done on my wallet. So here you can see I just labeled this talk it's Aaron, right? For the money that I transferred to Aaron, there's one confirmation.
It looks like you paid a fee there.
I did pay a fee. I did pay a fee.
Do you have an option of paying or not paying a fee?
I guess the clients now do a fee under certain conditions, which I don't fully understand.
It depends on the service that you use. So different services have different policies.
Okay.
And there's multiple exchanges on the market. Like they tweak the rules of a tiny bit.
Yeah. Okay. So the fee is 0.05 bit cents or 0.0005 Bitcoin. And that fee it depends upon the amount of the transaction and the size of it, depending upon how many wallets are involved in the transaction. And to be honest, I don't understand exactly what the threshold is. Sometimes you get a fee, sometimes you don't. And I need to understand that a little bit better. You can also voluntarily offer up to pay more of a fee, and then that fee goes into what gets paid to the miner for doing it. So if you want your transaction to be processed first or faster, you can offer up a fee. Now, the other thing about Bitcoin that I should mention is the amount of coins in existence. Here's the graph of the total amount of Bitcoins in circulation. You can see that it's declining. The rate of growth is declining. So there's about 11 million Bitcoins out there right now. By 2030, there will be 22 million, and the curve is going to continue to follow that shape, and then that will be the maximum. There will never be more than 22 million.
Why?
That's the way the algorithm was designed. The idea is that the shape of that curve is supposed to approximate the shape of the curve of gold bullion stocks over human history. So in 20 years, we're going to get this curve that was created over 5,000 years for gold, and that's why it's called mining, because there's kind of this gold analogy, which is interesting when you get into the economics of it, because there's some people that are gold bugs and think that we should have gold and we should have a currency backed by gold. There's also the current national currencies that we have that are called fiat currencies that maybe were backed by gold in the past but are no longer. And then we've got Bitcoin, which is different from either. In some ways, you could say that it's more, it's not backed by anything. It's not backed by gold. It's not backed by the credibility or lack thereof of a central bank. But there seems to me, and I'm not an investment advisor, there seems to me that there is a real value in Bitcoin. You could say that it's backed by the strength of the processing network that powers Bitcoin. That You know, that's a massive network of computer power, and it's generated this cryptographic system that seems to be secure.
Okay, has the market value of a Bitcoin from day of launch, what is that, June 2012? Is that the first date?
That doesn't sound right.
No, it's before that.
It's 2010. It was.
Yeah, it didn't go back.
That doesn't go back all the way.
That's on zero axis. Yeah.
Well, I don't want, you know, I don't mean to divert you. Presuming that that was the start date, or the start date is, you're saying 2010.
Yeah.
What was the fair market value of a Bitcoin then?
It was zero.
In relationship to, I don't know, buying knockwurst in Kreutzberg, Germany, if I recall the name correct. How many knockwurstes did I get per Bitcoin? And how many knockwurstes?
It's seen a tremendous increase in value. So if I go back to the history of time here, you can see that this is using Mt. Gox, which is a currency exchange that translates. You can sell bitcoins and buy dollars, or vice versa. So it doesn't go back to the beginning, but you can see that in June of 2011 there was a mini bubble, and then it dropped off. Then it picked up. It peaked at 260 back in
260 what, sir?
Dollars
per Bitcoin.
Yes. So it started at zero. It's peaked at 260, and lately it's trading at about $130 per Bitcoin.
Does that mean there were a lot of disappointed 260, 259 purchasers?
Yeah, yeah. So again, the disclaimer here is that, you know, the value can fluctuate. And there are people out there that are speculating. There are people that are buying it that are, you know, like they mentioned that those people the Spanish people that inherited $30,000 put all of it into Bitcoin and now have $500,000 or something. You know, it could be like Beanie Babies. Or tulips, yes, or American real estate, or the stock market. It's, you know,
there's no regulatory network monitoring this, apparently.
Oh, there's regulatory networks that are monitoring it.
but not capable of enforcing it. I mean, how do you not have? Again, I wish you every success, but how do you not become the victim of all the fraudsters and crooks out there, let alone the Wall Street bankers who will try and fix it?
Well, the Wall Street bankers don't like it. What
about the mafia, frankly?
Well, what's the mafia going to do?
I'd see this as a great thing to speculate in and drive up speculation and
kind of a pump and dump.
Exactly.
I think it is a lot like a penny stock, and there are like fluctuations in the trading price that occur. You know, people will launch a denial of service attack upon one of the exchanges to create, you know, panic and create news stories and drive the price down, and then they'll buy in. Or there are people out there trying to manipulate the market.
The volume a lot more than normal penny stock. I mean, I've played with penny stocks, and there's no liquidity. This even on Gox, the volume's like 25,000 a day.
Yeah.
Yeah. Yeah.
You'd have to have a lot of money to really, in the same way that you could do a pumping up on, say, a larger company, like a $30 million company. It's not that easy.
Yeah. I mean, people are trying to do it. The big fluctuations. I mean, you know, people have shown correlations of the price of Bitcoin compared to Google mentions. I mean, it's, you know, the thing that's unique about Bitcoin is that it's a currency that's not backed with a hard asset, that was created by, you know, an anonymous person, essentially created out of thin air, and it didn't start at any value. So it's hard to say what the correct value is. If you're investing in stocks, you can look at a price-earnings ratio, you know, and there's the theory that the value of a stock is equal to the present value of the expected future earnings. And you can use that as a fundamental to kind of check. With a currency, it's less clear. I've done a little bit of research on this. There are economists who have tried to value currencies. The famous paper is from Kiyotaki and Wright in the 1990s, where they used this economic theory called search theory to try to value currency. And it's a complicated paper, and I haven't had time to read it. But there may be some fundamental value because you can use it as a mechanism of exchange. And what that value is, I don't know. Is it gonna drop from 130? It could. If somebody finds a cryptographic flaw, it could all become worthless. The cryptographer is shaking his head.
No, I mean the crypto they're using they didn't invent the crypto. They invented the system around the crypto, but the crypto itself is very, very well understood and studied.
Yeah.
What does that mean? It's easy to compromise, or could be compromised?
You cannot compromise.
Well understood.
Let me put it this way: the highest government bodies, NSA, NIST, everybody in the U.S., everybody agrees that this is a secure cryptographic algorithm that they're using. The hash that they're using is secure.
Yeah.
So, nobody argues with the hash. It's the surrounding, the infrastructure around it. Are they using the hash correctly and stuff like that? That's what people need to say.
Yeah. So there are various risks. The governments of the world or the bankers of the world could launch, a massive effort to outlaw it and to shut it down. They will be saying that terrorists, child pornographers, and drug dealers are using it, and those people will use it just like they use cash, and try to shut it down, which will make it harder to receive or to spend. So that could be enough to make the value drop. One of the things that happened about 2 months ago is the U.S. government released some guidelines. There's a group called the FinCEN, the Financial Crimes Enforcement Network. That's a government body, part of the DOJ, I believe, that released a paper on how to regulate virtual currencies and what laws apply. And they're basically saying you have to file federal anti-money laundering paperwork if you operate an exchange. And they shut down a division of Mt. Gox, 2 weeks ago, because they hadn't filed that.
There's a wallet account in the U.S.
Yeah, because they hadn't filed the proper paperwork. But on the other hand, by issuing these guidelines, they're saying it's not illegal to use. They've essentially said it's not illegal to use Bitcoin. You just have to follow the rules if you're in a for-profit exchange business where you're serving multiple clients. Now that could change. If they find out the Boston bomber got his money through Bitcoin or something like that, they could cause a panic and get Congress to pass a new law. But when those guidelines came out, it removed regulatory uncertainty, and a lot of U.S. venture capitalists, they said, "Oh, we can do this. There's a legitimate space for this, and we think we can make money." And so now we've seen some large investments going into some Bitcoin startups. The Bitcoin startups have some interesting problems. The ease of use is not where it needs to be. You see what my total funds left in the account is 0. Where'd my money go? Confuses me, and I'm pretty savvy on technology. I'm not the average consumer. So there's a long way to go with making sort of easy to use wallets and then the other thing is the exchanges. There's also retail. How can you integrate it with a point of sale system? How do you accept payments for it over a website? There's a bunch of people trying to solve these problems. There's also alternative currencies that people are making that are different than Bitcoin. So people have taken the concepts and said, well, we're going to make something that is like Bitcoin but different in this way because we see there as being a flaw. So one of them is called Litecoin.
Mm-hmm. There's more than 20 different variations that are all similar to Bitcoin, but they all work somewhat differently.
Did you see they shut down one 2 days ago?
That's a different thing altogether.
He said virtually all the customers are criminal. Is there a certain...
Yeah, this was the Costa Rica-based company that had a digital currency, but they had a central. It was a central network. It was all managed by a single company, and they weren't requiring any anti-money laundering paperwork. They were just letting anybody use it, and yeah, a lot of criminals were using it, and it was also a centralized system. So yeah, so the government's watching this stuff, and they, they're going to regulate it. One conspiracy theory that I've heard is that Satoshi Nakamoto was actually a government. Because they say that it's anonymous, and it kind of is, but all transactions are public and can be tracked. So the balance between, it's pseudo-anonymous. So the balance between anonymity and transparency is yet to be determined.
When you say that, are they personally identifiable?
No. If you get, they even recommend, or he recommends in his paper, that you get a new public-private key pair for every transaction. And in that case, they can track it back to say, oh, this public key had this transaction, but they can't tie that public key to you or to anyone.
Maybe, depends. I mean, they can tie it to an IP address. Like, for example, I bought mine through a MoneyGram. Yes. I put in money, and I did a money transfer that went through anti-money, and they have my ID, and that went into a wallet, and then they can trace where all those funds go.
Use, Tor or some sort of IP address scrambler.
Yeah, but you have to get in and get out, and that's usually trackable. So it
would be a massive effort to track. I think. I mean, if they wanted to track a particular person, I suppose they would just break in and put a sniffer on your.
Yeah, it's less anonymous than the people who are trying to strike fear into our hearts about Bitcoin, and it's less anonymous than those people say, and it's more anonymous. You hear extremes where it's totally anonymous and everything can be tracked, and the truth is somewhere in the middle, and it's going to depend upon what technology is developed. You can kind of view Bitcoin as the IP layer of the internet, to make an analogy to a technical thing. It's really a base level system that things can be built on top of to provide additional functionality, and those things haven't been built yet.